Recently, I had a few $1,000s that I wanted to try new investing platforms out, and I didn't want to do any stocks or any crypto, so I found 5 really wild sites that I really got excited to share with you in this video today. So the first setup is VinoVest.co, and you can buy directly wines and they store them for you, and then you could sell them at a later date and make money. I'm not a big wine buyer or seller, but I just added $1,000 to the site. It doesn't really say what the minimum amount of investment is, nor do you have to be an accredited investor. But supposedly what's really interesting about this is you can buy wine, it always appreciates, don't believe it when people say that. They store it for you, and then at a later date, you can always sell those bottles, or by the way, they let you actually take them home. What they said is if you invest $5,000, you get around 24 to 36 bottles, and the average returns of these, I don't know how much I really believe in, but it seems pretty damn good if you look at some of the screenshots right here. So some of the questions that you may be asking about this is, what is the minimum investment for this platform? It looks like anywhere between $1,000 and $5,000. Number 2, do I get the asset to use as I purchase it? Yes. So you actually get to buy the wine, you can come and drink it, your investment, or you can leave it in their safe, secured places where they'll able to sell it for you at a later date. And if they go out of business, you actually get to collect the wine bottles because you personally own those bottles. So how do you actually make money on the wine? You wait for it to appreciate and you sell it at a later date, and they help you facilitate that transaction. So what am I excited about this platform investment opportunity? I'm not super excited about this because I don't drink a lot of wine. Hello, $2 Chuck at Trader Joe's. But I think it's really interesting to try different things like art, which we'll go into later, as well as wine or cars and things that are not as common assets, where potentially you can make a higher return because not as many people are doing it. So my score out of 0 through 10 of how promising this looks, I'm gonna say it's a 4, so I will put $1,000 in, and if I lose it, I'm okay with that, but I think it could make somewhere between 30% to 50% in a certain amount of years. I don't really know, but that's why it's a riskier investment and something I'm checking out. All right, second one, investing in art, and the site is MasterWorks.io. And so if you and me can't afford Warhols or super famous people, this is a chance that all of us can actually buy it, and supposedly the art world has outperformed the S&P consistently over the past 10 plus years. So MasterWorks is a chance that we can buy individual shares of famous art pieces. So let me show you how it works. There's different famous artists, Keith Haring, Christopher Wool, George Condo. I haven't really heard of any of these people, have you? And so what it is that they have an offering of the art piece. Me and you could buy shares from $20 to $1,000 and up. So what they do then is that they hold the art piece between 3 and 7 years in a secure location. When they sell it many, many years later, hopefully the price has gone up, and then as many shares as you have is what return you get. They don't actually talk about what happens if the share prices go down on the art piece. One other cool thing that I have liked about MasterWorks is that if you want to own a George Condo art piece, supposedly it'll go up 21%. I'm not really sure. But you can always sell your shares secondarily, meaning if I buy the art on the first launch of it, and I don't really want it, or I want my cash back later, I can always sell it in a secondary market that they're gonna help facilitate. So some of the questions that you might be asking about this art stuff, or why I'm interested in it, supposedly if the returns are good, it's an interesting way to kind of diversify your money and try something else new out. The minimum investment for the platform looks as low as $20, but they don't really talk a lot about that publicly. Do I get to use the asset? No, you don't get to use the asset. You could look at the picture online, and it's stored in a secure location provided by MasterWorks.io. One thing you have to be careful when you're doing something like MasterWorks or Vino Vest or any of these types of investing sites is make sure that if they go out of business because they're startups, that you actually have a legal right to own part of that property, not actually that their company owns it and they get to take it with it. How do you actually get your money back? So there's 2 ways you can get your money back. You can sell in the secondary market if that becomes available, or when they finally sell the art piece between 3 to 7 years later. But why am I excited about investing in art? I just think it's cool. I don't really know a lot about it, but I think for what their supposed returns are between 20 to 30% and how much they beat the S&P, it seems like a worthwhile thing to try with $1,000, and that's what I'm gonna be doing in one of these art pieces. One of the annoying things about MasterWorks.io is that they make you set up a phone call before you can start investing, which frankly, probably for most people, including myself, is probably safer and smarter than just like, oh sure, let me throw $1,000 out there. In terms of my level of 0 through 10 about excitedness for MasterWorks.io and pieces like this specific piece, I would say it's probably around an 8. It's a really interesting thing. Art is generally not accessible for most normal people like you and me, but this provides a cool way to actually participate in it at a larger scale and with a hopefully potential huge upside. Can you stretch your little finger for me, by the way, if you like this video and hit that like button? Number 3, investing in students. So the site is Edly.co. I don't know why they can't afford the .com, a little concerning. But the idea here, which is really interesting with Edly.co, is that there's a student, maybe someone like you out there, who needs help to pay for school. And you go to Edly.com, they give you the loan. Now, for you to pay back the loan plus interest, they take a percentage of your salary once you graduate and get a job. And it's kind of an interesting concept. Sounds like indentured servitude, a little bit weird, but it's something that maybe some of you want to try out to actually get loans on or to loan out to these future professionals. So how it works is that right now they have two different types of investments. One is principal protected and one is high yield. I think basically what this means is one is more risky. Generally, when you get a bigger return, you're getting more risk. The principal protected, they have it backed by US government bonds. So you don't actually get to choose the student you invest in, but you get to do it in $5,000 increments, and then they go out and choose the different students that they get to invest the money in. It's something, honestly, it just feels weird. I don't know if you feel weird as I'm explaining it to you. I can see where it makes a lot of sense. I like the idea. They're in Silicon Valley, they call them ISAs. ISAs are income share agreements. So this is something that's becoming way more popular. So I pay for your schooling and then you give me a little bit of your income as part of the agreement when you finally graduate. I'm just weirded out by it. But if you want me to invest in your company and you're actually doing something really interesting, let me know in the comments below. That sounds a lot more exciting for me than buying people. So a few questions that you might be thinking is, do I get to use the asset you purchase? No. Where is the person stored? I have no idea. You can't store people. I guess you can in the ground, but you're not going to store any of these people. How do you make money or collect dividends? So you put your $5,000, they go invest in all the students. I don't know how long. It looks like it takes around 4 to 5 years for the person to graduate, get a job, and then start paying that investment back. And it targets anywhere between 8 to 14% return on your money. Again, when they tell you these rates, they're not guaranteed. There's risk that you may lose all of your money. Why am I excited about this platform and investment opportunity? I just think it's a little bit different. It's a little bit creative. I think less people are going to be going to college, but still at certain status schools, Harvard, Berkeley, Stanford, people will be going there. They do want it to be more affordable for them. And this is a new creative way for people to actually get loans to school. There are sites like this, like prosper.com was an interesting one, as well as Lending Club, where you could go get loans and people like me could actually loan you the money. I did that in the past, but I realized it wasn't collateralized. I don't know if the student doesn't get a job, how they actually make your money back or collateralize. You can't really own the person. So one thing to be caveat with Edly.co and some of the other services I've talked about is you have to be an accredited investor. You can look up the details for that, but basically you either have to have a high net worth or I think make over about $200,000 a year in income. There's no secondary markets for Edly, so you can't buy and sell these people. But what they do is you actually buy a fund that they invest in individual people, so you don't really see anybody specifically. Let's actually find out what happens if the person doesn't pay back. Do they go to jail? So if the student doesn't actually end up paying, Edly seeks collection from students via professional servicer. That is someone who's a debt collector, it just sounds more fancy, and do extensive screening of the people prior to them investing in those people. So they charge around 4 to 5% of the cash actually collected and pay you out the rest in your profit and in your return. So in terms of a score of 0 to 10 on Edly.co, I'm about a 4. This is not something I feel really excited about. I like things that are collateralized and things that I'd probably want to use myself. And having loans like this, unless the rates were really tremendously great as a student, I don't know how excited I'd be to take a loan from them. All right, next up, so I want to show you rallyyard.com. Yes, they have a .com. This is a really interesting platform where you can invest in collectibles. So from cars, watches, memorabilia, comics, wine, whiskey. It's kind of a marketplace of investing in these collectibles that are really high value, but you can buy fractional shares of those items and then resell those items on the secondary market. So I'm gonna do one live. So they have Rolexes, Hermes bags, wines and whiskey. And it looks like if I wanna buy shares in this 79 Rolex Coral, let's see what the minimum amount of shares that you can actually buy in this is. Oh, you can purchase just one share of that Rolex. So the idea with the collectibles, if you're a collectibles expert and you know it really well, I don't, you can buy these items and then later as the price goes up or down, you can resell your fractional shares. So I'm gonna buy 5 shares of that Rolex. So a lot of times when you're having to do a DocuSign of an item specifically, that means that you are getting direct ownership of that fractional share of the item, which is great. So if the site ever goes out of business, you need to make sure that you'll have direct lineage to the products or things that you're investing in. So it looks like I just bought $5 or 1 share of a 79 Rolex Coral that is $69,000. So the way that rallyyard.com is interesting is that over time, if the value of that item goes up, I can sell it and make money on the share. If it goes down, I can sell it and I will lose money on that share. This is a site that I'm a little bit curious about. I don't know a lot about these things in cars and memorabilia and stuff, but I think if you find them fascinating and you have between $5 and $1,000 you want to go and waste potentially or invest, it seems like a neat idea. So what's the minimum investment for this platform? It looks like $5, which is pretty crazy. Do I get to use the asset? Not at all. It is stored on their platform. How do I make money? My money back are their dividends. There's no dividends on the platform, but the idea is over time, you can see some of these items. So like this is a 99 Shelby Series 1. So you can see that since they actually listed the item, it's actually gone up about $4,000 or 2.5%. So you can resell your share if you bought shares in that item. I think as well as some of the watches in luxury, you can see here like the Rolex GMT, I think it's the Pepsi Jubilee. It originally now is up, so it's up around $9,000 since they originally listed it. So if I would have bought that and then a few months later it gone up, 51% would have been a good thing for me to invest in. So the current share price is $13.50. The comparable asset value, so this is the idea of the asset of the stock, of the item over a period of time. So when they sold the watch originally on the site, it was $9,250. And now it's trading around $18,000. So how do you pick the right collectible on the site? I have no freaking clue. But I'm really excited about this platform and investment opportunity because I think there's a really interesting, diverse group of items. They can include art, just like we saw in MasterWorks.io. Do I know how to pick which items are gonna go up and down over time? No idea. So I think that makes it really risky on the upside. But in terms of the fun side, you can own a little fraction of some of these famous items that you've seen in magazines. And so in terms of 0 to 10, how excited I am about rallyyard.com, I'm a probably 9. I just put in actually $1,000. I got a watch. I don't know what's next. Maybe you tell me in the comments what you think I should waste more money on. Or if it's something that you think is interesting as well. By the way, in a month or two, I'm gonna update you on how these investments I've been doing from my wine investment to my Rally Yard investment. So make sure to hit that subscribe and notification bell, and you'll be able to see an update when it comes out. As well as if there's new investment platforms you want me to waste my money in and take the risk, let me know in the comments below. So number 5 is investing in residential real estate. And we're gonna show you 2 sites, one that I've just started getting interested in and one that I actually use daily. So the first site we're gonna talk about is RoofStock.com. And what's really, really fascinating about RoofStock is if you think of Zillow, you go to Zillow, type in a house, or you see a house, it's either for sale or for rent. What RoofStock does, they go out and find houses that have renters and they sell those houses. And then they show you the economics of how much money you're gonna make on the house or not, and they manage the entire house for you. It almost sounds a little too good to be true. So let me show you a few examples. They do it in 3 different ways, but the number 1 way that they got started is you buy properties. So right here, they're showing you properties that have renters in them and they show you the cash flow. So let's look up in Chicago, Illinois. What up, Chi-Town? So in Chicago, Illinois, they have a house price that is $165,000 and there's actually some fees. So you gotta make sure you check this little initial investment box. They have closing costs, maybe repair costs, and potentially loan fees if you have to borrow money. So you bid on the house, but what's really interesting about the site is they actually show you what rent people are paying and you're likely to get from this house. And then they show you the actual returns you're gonna get on that property. So your annualized return, your cap rate, your gross yield, cash flow, and then the likely appreciation of the house. Is it for sure gonna happen? No, you never know if there's gonna be a pandemic, how cities are gonna evolve or change. But I think it's really fascinating that they kind of package the whole experience and then they manage it for you on roofstock.com. For me, I think because the houses are not locally, it makes me a little weird and it's still so new, I don't know how it's actually gonna be experienced. I'd love to talk to anyone that's actually bought a house through this. They do 2 other things that I think are really clever at roofstock.com in owning properties that you get rental income from. I think that's passive income dream that a lot of people imagine. Number 1, they have portfolios. So if you don't want to just buy one house, but you want to buy a little bit of many properties, they have a portfolio share. So it shows you people who are selling multiple houses and you can buy fractions of multiple houses in certain areas. Maybe it's Kansas. Kansas is actually a pretty cool city. If you haven't been out there, get some barbecue. But they generally have like duplexes or someone who's selling multiple properties. This one's not as interesting for me as the next one, which is property shares. So let's say you want to buy some of these houses, but you don't want to deal with anything. You're just like, nah, not for me. I just want to get the money. That sounds like the great part of all of this one. So what you do is they have a thing called RoofStock One, which is a fund. So the idea behind it is instead of you buying that entire house in the first part, like I showed you, you just get to put on a minimum investment and not have to deal with anything. Generally, when you do that, you get a lower return because you're taking less risk on the house. And all the properties that were in this were sold out at the time of this video. But I really like this, and what you're choosing here is probably more of the geographical area of Indianapolis versus Atlanta versus Dallas, wherever you think is gonna get bigger. But I like the idea of putting in smaller amounts, seeing how it goes, and then potentially investing more. So some other questions that you're thinking about for roofstock.com, minimum investment for the platform. Some of these houses are super expensive, from 50 up to millions of dollars. But these properties on the RoofStock One, which are in the fund, you can actually do as low as it looks like $6,000. Some of them are small, just like that. Do I get to use the asset you purchase? Probably. I think actually if you own the house, you don't have to rent it out to other people. I think you should be able to actually go and use the house. Let's check that out. That's actually a really interesting question. Yeah, I don't know if you actually get to use the house if you don't want to rent it out. That's a fascinating question. Where is it stored? It's stored wherever the city is. How do I make my money back or collect dividends? It's just like a normal property where your renters pay, and it looks like RoofStock facilitates the entire transaction. I'm not sure if they find new renters if your renters end up leaving, but if they did, this would make a really, really compelling site. Why I'm excited about this platform investment opportunity, if you know Rich Dad Poor Dad and you know a lot of people that want to make a lot of money from doing real estate, this actually seems almost too good to be true, where they find the house, they find the renters, they manage the renters, they show you how much you're going to make, and all you have to do is you put your money in. It seems pretty damn great. So where am I on a score of 1 to 10 for this? I'm about an 8. If the amounts weren't so high where I had to put in like $10,000 or higher, I'd probably be willing to put in $1,000 to $5,000 just to kind of see what the experience is like. So I signed up to find out about the fund approach and see if that becomes available. The site that I actually do use is called PeerStreet.com, and it's a little bit of a different approach. So what PeerStreet.com, and this is my actual account you're seeing on the screen, what you do here is that there's investors trying to buy houses, and you are giving loans to an investor, first loan, meaning you get the property if they default, on these houses. So let me show you some of the houses I've invested in. I've actually paused investing new money in it because I already have almost $200,000 in this. But what they do is they say, here's a property, here's the loan amount, here's the terms of the deal. And so you can actually see pretty detailed explanations. That the fascinating thing about PeerStreet for me personally was just to understand economics of real estate. Especially if me and you are not super advanced in this, you kind of get to see how a professional looks and makes decisions on real estate. And for small amounts, you can even put, I think, a few $100s in, up to as much as you want, be a part of these different investments. Let's just take a look at this one. So this is a property in Aurora, Colorado. What up, Colorado? It's a single family home, buy to rent. And so you can look at maps and comps. So the way that PeerStreet works is they charge an interest rate to the lender. They take 1% and then you get the rest of the return on that interest. There has been defaults and they handle all the default part. Let's actually look at my overall return overall from PeerStreet.com. Why I've paused, by the way, of investing in new money is that as pandemic was happening, I was a little bit nervous about giving out loans to houses, so I didn't really want to have more exposure to that. But it looks like overall, my whole experience with PeerStreet.com, I've gotten around a 7% annual return from the money I've invested. So compared to the 0.5% that you get on a money market fund, it's actually pretty damn compelling right now. One other site that I do want to show you, it's not as much going to be a great investment, but it's in the same category of this real estate stuff. It is Pacaso.com. Really, really interesting model. I'm not sure I love it, but it's basically fractional home ownership that you can use. So this business is specifically set up so that if you want to live in these amazing houses, this is in Lakeside near Lake Tahoe, California, you can basically get an insane house for $500,000. So the way that it works is that the house is $500,000 times 8 pieces. It's a $4 million house. So you're buying 1/8 of it. So you get to use it 1/8 of the year. And the nice part about it is that they furnish it, they take care of it. You don't have to deal with any of the headaches of like, oh, do I have to Airbnb it and all this stuff. Plus you can store some of your stuff there. The only downside to this is that you don't own the property. You can sell your amount after a certain period of time, which is a good thing. But if you look at the economics, if you break this down on how much am I paying on a per night basis, it's cheaper just to either Airbnb it directly or go and just buy a house and get a property manager to deal with the Airbnb for you, which the economics actually look a lot more promising. But the idea of Pacaso is really interesting, that for only $500,000, you can have an insane house that you can use for the rest of your life and pay a small maintenance fee to actually deal with it. So why not stick to stocks and real estate? One, it's boring. And so the way that I like to look at the money thing is there's gonna be your 7 to 10% returns, which is stocks and investing. But the 10X or 10 baggers, as Professor Damadoran likes to say, is gonna be through some of this new experimental things that we're talking about. Another thing that I like to consider is that I have about 5% of my money I like to invest in risky things. So that could be Bitcoin, that could be in a church, yes I did a church, that could be a bar, yes it went bankrupt, and it can be sites like Teachable.com, which I did invest in, and they sold, so I got a return from that. But the cool thing about it is just you get a chance to experience new types of business models and learn some new things. So who should invest in these opportunities? Number one, get 12 months of cash in your bank. Number two, don't do it unless you're prepared to lose the money. This amount of money, I'm okay losing a few $1,000s. If that's something that you're not prepared to do, I would recommend sticking to the basics or creating your own company where you're probably gonna have much higher upside and much more control, which you really don't get in these types of opportunities. So a few other alternative investments I've tried out over the years that are part of my 5% risky portfolio. I've invested in startups. I've done Buffer, Teachable, Huckberry. The results from that is Buffer and Huckberry have not sold, but it's cool to be a part of those businesses that I love. Teachable has actually sold and I made about 5x return on my money over around 5-year period. It went from a $10,000 investment, ended up returning $60,000 total, which is pretty damn cool. So I do have an Airbnb rental that has produced around a 15% return. The thing that I consider is that, do I want to be spending my time doing more of this? Probably not. I like the internet stuff that I get to do, but it was something I wanted to try and experiment, which I'm glad I did that. I have told you I invested in a bar, $25,000 in Austin. That has basically gone out of business. I invested in a church. I lost about half my money on that. They finally were able to sell it. I've invested in crypto that actually ended up turning out to be all right. But the point here is that I have an asset allocation, which I talk about in a video that we'll show at the end, so you can actually see the rest of my finances. It'll probably be somewhere up in the corner here or somewhere up in the corner here. Let me know in the comments what you thought of these different alternative investments, and if you want me to show you new ideas that I'm thinking of or I got excited about to share with you sexy people. By the way, if you like videos like this, check out how I actually do my own personal finances. You can see that in the video up here. And if you haven't already, make sure to hit the subscribe button right here so you can see the results of this video in a few months, as well as you don't miss my exclusive office hours and juicy business videos to help you on your journey. I love you, and I'll see you out there.